Have you ever wondered how finance works? Well, it's not as complex as it might seem. Finance, in its core sense, is the management of money and includes activities like investing, borrowing, lending, budgeting, saving, and forecasting. It's a crucial component of our daily lives, even if we don't always realize it. Think about the moment you wake up in the morning and grab a cup of coffee. That's finance. When you pay for your commute to work, or when you're saving up for that dream vacation, all these involve finance. It's in the way we manage our income, how we decide to spend or save it, and how we plan our financial future. It's not just about the big corporations or the stock market. It's about everyday decisions that shape our lives. So, finance affects everyone every day, whether you're buying a cup of coffee or saving for your dream vacation. To get a grip on finance, you need to understand its language. Picture this: you're at a bustling marketplace. The goods you can buy, these are your assets. Assets are everything you own that has financial value. This could be your house, your car, or even the money in your bank account. They are like the products you can purchase at the marketplace. On the other hand, imagine you borrowed money from a friend to buy something at this marketplace. This borrowed money becomes your liability. In the financial world, liabilities are what you owe. This could be a mortgage, a student loan, or credit card debt. They are like the IOUs you give when you borrow money. Now let's talk about income and expenses. Imagine you're a stall owner at the marketplace. The money you earn from selling your goods, that's your income. Income is the money that you earn from your job, your business, or your investments. It's like the cash you get when you make a sale. But running a stall isn't free. You have to pay for the goods you're selling, the stall rental, and other costs. These costs are your expenses. Expenses are the money you spend on bills, groceries, rent, and other things you need or want. They're like the costs of running your stall. Finally, let's talk about savings. At the end of the day at the marketplace, you count the money you have left after paying off your expenses. This leftover money is your savings. Savings are the money you set aside after covering all your expenses. They are your safety net, your rainy day fund, your ticket to future investments. With these concepts, assets, liabilities, income, expenses, and savings, you have a basic understanding of finance. They are like the language you need to navigate the bustling marketplace of finance. With these concepts, you have the building blocks of finance. Banks and other financial institutions are the pillars of the financial world. These entities play a pivotal role in our daily lives, whether we realize it or not. Banks, for instance, act as intermediaries, accepting deposits from those with surplus funds and lending to those in need. They essentially facilitate the flow of money within an economy. Then we have credit unions. These member-owned financial cooperatives offer many of the same services as banks. However, the key difference is their ultimate goal: to serve their members rather than to turn a profit. Financial markets, on the other hand, serve a different purpose. They are like a bustling marketplace, but instead of goods, they deal in financial securities like stocks and bonds. They enable businesses to raise capital, governments to fund public projects, and investors to make their money work for them. In essence, financial institutions are more than just places to store your money. They are the wheels and cogs that keep the economy moving. These institutions help keep our financial world spinning. Imagine you're planning a road trip. Budgeting is your roadmap in finance. It's the tool that helps you navigate through your financial journey, providing you with a clear picture of your income and expenses, and ensuring you don't run out of fuel along the way. Think of your income as the fuel for your journey. The more you have, the farther you can go. Your expenses, on the other hand, are the bumps and detours that slow you down and consume your fuel. A budget serves as a guide, helping you avoid these obstacles and make the most of your resources. Consider this: without a budget, you might find yourself stranded, without a sense of where your money is going or how to control it. But with a budget, you have a clear itinerary, allowing you to plan your stops, set your pace, and reach your financial destinations with ease. So how do you create a budget? It's simple. Start by listing your income sources and tracking your expenses. Then set spending limits for different categories. Stick to these limits, adjust as needed, and watch your financial security grow. A good budget keeps your financial journey on track. Ever dreamed of making your money work for you? Let's dive into the captivating world of investing. Investing is about putting your money into different types of assets with the expectation that they will increase in value over time. Think of investing as planting a seed today to reap a bountiful harvest in the future. There's a smorgasbord of investment options out there. Let's start with stocks. When you buy a company stock, you're essentially purchasing a tiny slice of that company. Bonds, on the other hand, are like IOUs. You lend your money to a government or corporation, and they promise to pay you back with interest. And let's not forget real estate. This involves buying property, which could increase in value over time or provide a steady income stream if you rent it out. Investing is not a get-rich-quick scheme, but a strategic move to grow your wealth over time. Remember, investing can fuel your financial growth. So, are you ready to make your money work harder for you? Scene script, debt. It's a word that can make some people shudder. But it's a reality for many, and understanding it is crucial in mastering your finances. Let's break it down into three main types: credit card debt, student loans, and mortgages. Each has different interest rates, payment terms, and impacts on your financial health. Credit card debt, often with high interest rates, can spiral if not managed correctly. Paying off balances in full each month is a solid strategy to keep this in check. Student loans, while necessary for many to pursue higher education, can weigh heavy. Consider options like income-driven repayment plans or loan forgiveness programs. Mortgages, typically the largest debt one incurs, is not necessarily bad. It's often considered good debt, as it allows you to invest in an appreciating asset, your home. Making regular payments and refinancing when it makes sense can help manage this debt efficiently. With smart strategies, you can take control of your debt. What if your car breaks down or you lose your job? These unexpected situations can derail your finances if you're not prepared. That's where savings and emergency funds come into play. Picture this. Your savings is a treasure chest, gradually filled with the fruits of your hard work. It's not just for buying that dream vacation or a shiny new gadget, but a crucial element of your financial security. But let's go a step further. An emergency fund is a specific type of saving. Imagine it as a special lockbox within your treasure chest. It's money set aside specifically for those unforeseen life hiccups. Financial experts often recommend having enough in your emergency fund to cover 3 to 6 months of living expenses. This isn't about stashing away every single penny, but about being prepared and securing peace of mind. Remember, it's not about if an emergency will happen, but when. An emergency fund is your financial safety net. What's your financial dream? That's not just a casual question. It's the starting point of setting your financial goals. Having a clear vision of where you want to be financially can provide the direction and motivation you need to plan and manage your finances effectively. Imagine the goals as your destination. Without a destination, you're just wandering aimlessly. But when you know where you want to go, you can map out a path to get there. Now, these goals could be anything from buying a new car, purchasing your dream home, or saving for retirement. The key is to make these goals specific, measurable, achievable, relevant, and time-bound. That's what we call SMART goals. Setting financial goals isn't just about the end result. It's about the journey, the discipline, the lessons you learn along the way. Remember, every small step you take towards your goals is a step towards financial freedom. Your financial goals are your financial compass. So, we've taken a whirlwind tour of the financial landscape. We started by understanding what finance is and why it matters to us all. Then, we unpacked key financial concepts, including assets, liabilities, income, expenses, and savings. We looked into the role of financial institutions like banks and credit unions and explored the importance of budgeting. Moving forward, we delved into the world of investing, learning about different asset classes such as stocks, bonds, and real estate. We talked about managing and reducing debt, and highlighted the significance of savings and emergency funds. We discussed the power of setting financial goals and the intriguing relationship between risk and reward. In every phase of our lives, finance plays a critical role. It's not a subject to fear or avoid, but to embrace and understand. Keep learning, keep growing, and remember, finance is not a mystery. It's a tool for achieving your dreams.